Now, let's test our understanding of the first three videos. First of all, before we begin, you could either download and print off this problem and do it yourself, or pause the video right now, look at the questions, and answer them for yourself. Well, here I go then. Number one, the process of identifying, recording, and communicating economic events of a business to interested users of that information. Well, that's what the accounting profession's about. So that's number one. Two, what are debts and obligations of a business? That term we use is called liabilities. Liability is a debt. What are the resources owned by the business? Resources are, another word for resources are assets. Assets are things that the business owns. Okay? The amount of which expenses exceed revenue. Well, if my expenses exceed revenue, I have a loss. So therefore, net loss. Number five, a business organization is a separate legal entity having ownership divided into transferable shares of stock. Well, business organizations, remember there were three: sole proprietor, partnership, and corporation. And this is a corporation. Oh, it looks like the numbers are following sequential. Okay. The amount of net income kept in the corporation for future use, not distributed to shareholders, you remember that term, and dividends. Dividends is what we pay back to the shareholders. So the statement where we keep the amount of net income, and that is called the retained earnings account, not statement. Number seven, assets equal liability. That's our balance sheet equation, or called the accounting equation. Payments of cash from a corporation to its stockholders. That's dividends. And that would be number eight. The cost of an asset consumed when I use up an asset. Consumed or services used in the process of the ongoing operations to generate resources, assets, or what have you. That's expenses. 9. What I use up. Financial statement reports asset, liabilities, and shareholders at a specific point in time. Okay, that's 10. Now we move on to multiple choice. All of the following are characteristics of a sole proprietorship except a business owned by one person. No. Owner has control of the business. That's true. That's a sole proprietor. Separate legal entity. No. Small owner-operated business, that's true, the sole proprietors. So C is the exception. All of the following are characteristics of a corporation except a separate legal entity. That's what a corporation is. Ownership evidenced by shares of stock. That's what a corporation is. Produces 8 times more revenue than sole proprietor partnerships in the United States. That is also true. Owners have unlimited liabilities. They'd have limited liabilities. That means that people who are owed money by the corporation cannot go after the owners of the corporation to make good on that debt. Third, corporations may issue several classes of stock, but stock representing the primary ownership interest is a common stock. That's the term we use, not retained earnings. Retained earnings is what the earnings the corporation has kept. Financing activity, no. The dividends, no. Resources owned by a business that carries out liabilities, no. That's what they owe. Shareholders' equity, no, right? The answer is D. Assets. Okay. Term used to describe total assets as Starbucks receives in exchange for its coffee. That is cash. That's what they get. Financial statement which presents a picture at a point in time which the business owns and owes is a balance sheet. Net income shown on the income statement is added to the beginning balance of the retained earnings in the retained earnings statement. To report the success or failure of a business operations during the period is the purpose of a income statement, whether I have a profit or a loss. The ending balance in retained earnings is shown in the balance sheet. See, and it's also shown in the statement of retained earnings. So the answer here is D. Which of the following is not a correct form of the accounting equation? Assets equal equities, you add liability and equities. Assets equal liabilities plus shareholders' equity. Assets minus liabilities equals shareholders' equity. That's true. Assets plus stockholders' equity equal liability. That's nonsense. When the shareholders invest cash into business, what is the effect? Liabilities increase and stockholders' equity increase. No, that's true, not true. Liabilities. Both assets and liabilities increase. That is not true. Both assets and shareholders' equity increase. Yes, that's what's going to happen. But we will take more of that when we get into how we record financial transactions. That's a little difficult for you now. When service is performed on account, what's the effect? Well, if I perform it on account, which means I didn't get money, so if I didn't get money, my accounts payable increases. Both accounts receivable, accounts payable increases, and retained earnings decrease. Sorry. The answer is C. Accounts receivable and retained earnings increase. The old professor screwed up. Anyway, that's the end of this, the first multiple choice question. Okay.